Hey Suffield, what's the biggest challenge heading into the spring market? Take a listen to this month's Suffield housing market update. First, let's take a look at what's been happening in Suffield. In February, 6 homes sold, and that's down 33% as compared to February 2022. 6 new listings came on the market, and that's actually up 20% from 2022. The sales price to list price ratio is 104.6, and that's up 4%. And the average price per square foot is $200, and that's up 12% from 2022. The average sale price in Suffield for February was $328,000. The average days on market is 63 days, and that's up 15% from 2022. Now, as far as inventory level goes, the absorption rate is 2.53 months, and that's pretty flat from 2.5 months in January of 2023. Now, how that works is 6 months is considered a balanced market. So anything more than 6 months is a buyer's market, and anything less than 6 months is a seller's market. So at 2.53 months inventory, we're still very much in a seller's market. We started this year with great interest rates. We even saw them dip down again into the 5s. However, as more uncertain news came as it pertained to inflation, we saw rates start to tick up again. And this has had a direct impact on buyer demand. Rates have dipped down once again, bringing bigger buyer demand to the market. So while interest rate volatility presents a challenge, I think our bigger challenge as we head into the spring market is inventory. We need more houses to sell. And while inventory has increased year over year, we are still significantly low as it compares to 2019. This graph does a great job from Realtor.com. This graph shows the active monthly listings in the last 7 Februaries, 2023, compared all the way back to 2017 when the market was more normalized. Looking at February and seeing 578,000 homes listed in 2023 as compared to just under 1 million in 2019, it's evident that inventory is the real challenge as we head into the spring. So what's causing the housing deficit? Well, that's a whole nother deep dive and a whole nother conversation. But what I can say is that we are short supply of inventory, and that is keeping prices stable, even with what's going on with interest rates. For our homeowners out there, I think it's a really important detail to note that you're in a fantastic equity position. And now may be a great time to do something with that equity. Let me start with this quote from Adam Data. It says 48% of mortgage residential properties in the United States were considered equity rich in the fourth quarter, meaning the combined estimated amount of loan balances secured by those properties was no more than 50% of their estimated market values. And now this is the 2022 third quarter CoreLogic Homeowner Equity Insights Report. And what it shows that over 1 year alone, homeowners gained an average of $34,000 in equity. And that's year over year percentage increase of 15.8% for US homeowners with mortgages. Now, of course, we know that varies market by market, but let's take a look at this map. This tells a really great story. This is the percent change in home prices over the past 5 years. So on average, it's how much home prices have changed in the past 5 years. The national average is 58.4%. So home values have increased almost 60% over the past 5 years. So anyone who's been in the home for 5 or 6 years, they're looking close to 60% increase. Now, if you look state by state and look at Connecticut, you can see that Connecticut homeowners have gained almost 50% equity. That is still pretty incredible. Homeowners, you have significant equity. You have gained that over time and you have earned that over time. And this could be a great opportunity to use that equity to fuel your next move. Want to see what the equity looks like in your house? Click below to find out or send me a DM and I'd be happy to do an equity review as it pertains to your house. Thanks for your likes, shares, and comments. And if you found this information useful, hit that subscribe button below. All right, this is your March Suffield housing market update. See you next month.